Good morning, this Wednesday, the 3rd of July. I'm Grady Wolf, market analyst with Bell Direct. Wall Street closed higher on Tuesday after Fed Chair Jerome Powell acknowledged progress on inflation in the region, but reiterated the Fed was not quite ready to cut interest rates just yet. The Dow Jones rose 0.41% on Tuesday, while the S&P 500 gained 0.62% to close at a record of 5,509 points, and the Nasdaq jumped 0.84% to a record close of 18,028.76 points. Tesla shares rose 4% on Tuesday after the EV company reported better than expected deliveries for the second quarter, while Apple shares hit a new intraday high over $220 per share on Tuesday as investors assess the company's plans to introduce AI to its iPhones and other products. In Europe, overnight markets closed lower following the release of key eurozone inflation data. The STOXX 600 fell 0.4% on Tuesday, while Germany's DAX lost 0.69%, the French CAC declined 0.3%, and in the UK, the FTSE 100 ended the day down 0.56%. Headline inflation in the euro area dipped to 2.5% in June, which met economists' expectations. However, core and services inflation remained stubbornly high, which sparked the equity sell-off yesterday. Across the Asian markets on Tuesday, it was a mostly green run across the region as Japan's Nikkei rose 1.12% to close at a three-month high, while Japan's broader Topics index rose 1.15%. Elsewhere, Hong Kong's Hang Seng rose 0.33%, while South Korea's Kospi index fell 0.84% after South Korea's inflation rate came in at 2.4%, which missed economists' expectations of 2.7%. The local market extended this week's red run into Tuesday's session, with the ASX 200 closing Tuesday's session down 0.42% as investors assess the hawkish comments out of the RBA in the latest meeting minutes released yesterday. A near two-month high price of oil, though, boosted the energy sector to a 2% gain, which offset some of the heavy losses among every other sector, including heavily hit REIT and bank stocks yesterday. The latest RBA meeting minutes were released yesterday with a very hawkish tone continuing through the latest update. Michelle Bullock outlined in the minutes that it is difficult to rule in or out future policy moves as the outlook remains highly dependent on economic data in order to tame inflation to the target 2 to 3% by the RBA's deadline of 2026. Retail sales and new building permits data in Australia will be released today, which will play a vital role in the economic data-driven rate outlook for the RBA at the next meeting. Lithium developer Liontown Resources rallied over 7% on Tuesday after announcing the securement of $250 million in funding from South Korean battery conglomerate LG Energy Solutions under a 10-year funding agreement. Domino's Pizza shares came under pressure yesterday, though, after Barrenjoey and Ord Minnett noted the pizza giant is facing three major earnings challenges through a weakening Japanese yen, a jump in cheese prices, and a slower than forecast store rollout, which will likely hurt earnings in FY24. On the commodities front this morning, oil is trading 0.61% lower at $82.87 a barrel. Gold is down 0.3% at $2,325 an ounce, and iron ore is up 1.4% at $108 a ton. One Aussie dollar is buying 67 US cents, 107.63 Japanese yen, 52.56 British pence, and 1 New Zealand dollar and 10 cents. Ahead of the midweek session here in Australia, the SPI futures are expecting the ASX to open the day up 0.25% on the back of Wall Street strength overnight. And now let's dive into some trading ideas for your consideration today. Bell Potter has downgraded the rating on Monadelphous Group from a buy to a hold and reduced the 12-month price target on the leading Australian engineering group following the analyst revisiting key indicators, including the outlook for a quietening major project development pipeline with limited visibility on near-term contract awards. With the outlook for reduced engineering construction division revenue contribution to the group revenue, it will likely lead to EBITDA pressures. And Trading Central has identified a bearish signal on HMC Capital following the formation of a pattern over a period of 23 days, which is roughly the same amount of time the share price may fall from the close of $6.98 to the range of $6.35 to $6.50, according to standard principles of technical analysis. And that's all for this morning. Have a wonderful morning and happy investing.